Welcome to On The Beat, everyone. I'm Troy Thompson. Joining me in the studio today is Jeff Farnham with JTS and Company Mortgage Professionals. And today we're talking all about homestead exemptions. Welcome to the show, my friend.
Yep.
Okay, we're here to educate our audience, but I don't even know what we're about to talk about with homestead exemptions. Explain to me and our audience as well.
Yeah, so a homestead exemption, it's a tax incentive, right, for homeowners that essentially what happens if let's just say you own a $150,000 home and the taxes are $1,500 a year without homestead exemption. That's just the assessed taxes on the property.
Right.
Homestead exemption gives you approximately a 50% tax incentive, so it'll cut those taxes in half. So in Mississippi, in most states have something very similar. You can file for homestead exemption on one property as your primary residence, whichever one you designate, and it'll cut the tax bill in half for you. So it's a tax incentive and a way of encouraging home ownership.
Is this widely known?
Yeah,
this is the first I've ever heard of this.
Yeah, I mean, most people that are homeowners or who have been homeowners know about it. New people coming in, young people starting out just buying their first home, aren't really aware of it, but that's where their realtor comes in, helps explain it as an incentive to buy the home. It's just a way of, another way of encouraging home ownership.
Now, you saying that, it's going over in my mind. Is this going to affect my monthly mortgage payments?
Yeah, absolutely, it could. So here's the deal. When you buy the home and you close on it, depending on what time of year you close, you're going to get the benefit of whatever the current tax incentive is.
Right.
Whether it has homestead exemption on it, whether it doesn't, does it have an over 65 exemption for someone that's over 65? So if I buy a home today that they're over 65, I'm going to have that tax estimate applied to my mortgage payment.
Really?
But next year, if I don't go file for homestead exemption, my payment's going to go up because their exemption is going to be removed, and then the county is going to put the full taxes back on it. So as a homeowner, I have to go in January and February of the year following my close, file for homestead exemption. Now, I do that one time, and unless I remove it, it'll stay on there as long as I own the home. Right.
Now, where do I get to file for this?
You'll go down to the tax office, and there's paperwork. It's not hard. It's an easy process. There's just a time period in which you have to do that, usually the first 2 months of the year. You get to March to get it accomplished.
All right. What do I need to take with me? The mortgage papers, or
you'll need
what do I need?
Yeah, identifications, take your mortgage paperwork where you closed on the house, what's called your settlement statement, your warranty deed, those things, and they'll go in, fill out a form. It takes probably 10 minutes or less to get it done.
Okay, you just said to me that once you do this, you don't need to do it every year.
No.
Whilst you own and live in that property.
Correct. So once you filed for it, unless you change the classification or you sell the home or something like that, it's done on that property.
Okay.
Right. Now, if I buy another home and let's say that the taxes on it are greater, and I want to designate it as my primary residence.
You can.
Then you have to go down and talk to the tax office and figure out what's the best way to do that.
This is information that will end up saving people a lot of money.
Yeah, absolutely. And sometimes you buy a home, there's no homestead exemption applied to it, so you definitely want to go and apply for it next year, because when you do, your payment's going to adjust, because your total payment is made up of your principal and interest to repay the loan, 1/12 of insurance, 1/12 of taxes.
Wow.
So if the taxes are $1,500 a year with no homestead, that's $125 a month.
Yeah.
So if I can cut that down, file for homestead, and let's just easy math, let's say it cuts it in half, then that's going to drop my payment by about $62.
Okay, remind me, when is the right time to be doing this?
So the time to file is in January through the 1st of March.
Right.
Right, is the time to go do that. So you'll go down to the courthouse and take care of it.
Okay, so the same year, or what happens if I buy the home in July? I have to wait.
You'll wait till January.
And then it's backtracked?
Correct. You wait. Well, no. What'll happen is, because when you close in July, whatever the tax classification is on it, then that's going to be applied through the remainder of the year.
Oh my God.
So then you go and file in January of the next year.
Yeah.
Right.
Brilliant.
So we send out a notification. We remind people to go do that to make sure.
You do that, your office?
Absolutely. Yeah.
We're going to start doing it all through you.
Yeah.
That's the whole plan.
We do it for our customers, people that we've closed this year. Yeah,
exactly.
We want to make sure, because it's an important thing. You need to make sure that's correct.
We appreciate you.
Yeah,
always good information. If you want to find out more information, there it all is up on the screen for you. Listen, you need to go and see Jeff and his entire team. They'll put you on the right track.